Stocks our strategists feel are poised to deliver positive returns are featured now in their top stock picks of the week.
Welcome to today's Top Stock Picks. I am Jeremy Mullen. Brian Bolin will be after me with his pick, but first, I'm going to do Peloton, ticker symbol PTON. A lot of you guys already know this one. This is the former high-flying stock, COVID stock that we saw just go bonkers back during COVID, as everybody wanted a gym or something at home that they could work out with. And these guys make those stationary bikes with a fancy screen where you can get live classes and you can do all kinds of other different stuff. I actually had one before COVID, so I was lucky enough. There was shortages back then, which created this big backlog and a lot of sales for the company. So the stock absolutely took off. But of course, when COVID ended, everybody already had a bike. Nobody wanted a new one, and the stock collapsed. But now we're seeing a little improvement in the stock price and the fundamentals. So I think it's we have a good risk reward here. It's that there's a nice entry point to get in this stock in case they actually do bounce back here. So let's get into it. Let's look at the profile page. As you can see, it's the Zacks rank number 2 buy. We have pretty good style scores here with A in growth, momentum, and a B in value. Look at the VGM is good as well. Looking at the market cap, this is a $3.2 billion company. No dividend, of course, as we're trying to grow. And the earnings are finally starting to get there. So they really don't have money to pay an actual dividend. Beta 2, I want to point this out, 2.08. This is a volatile stock despite its low price. You can see today it's down 2%. Usually what the beta is, the market's up 1%. This stock's going to be up to if it's 2.8 beta, it's like times 2. So it moved twice the movement of the actual market in a given day. Let's look at the web page. I wanted to show you guys kind of what they do here. If you're not familiar, they started off with this bike and made improvements. So they have 2 different kinds of bikes. They have a rower and a treadmill, 2 different kinds of treadmills. Now, there are other stationary bike companies out there. What makes this special is this fancy screen up here and the live classes that they do. They also have an app and strength and conditioning classes that you can take as well. The subscription model, it's a little over I think it's about $40 a month, and you get access to all this cool stuff. And their bikes are pretty expensive. Look at that. For the old one, we're looking at around $1,200 to $1,400, and for this Plus, we're looking at times twice that, about $2,500. Looking at the treadmills, we have one around $2,700 and $500. So this is pretty expensive to get, and then you got to pay the monthly subscription. So why would anybody do that? Well, they have these kind of minor celebrities here that people absolutely love. They do these classes. I have some extended family who absolutely love this guy. His name's Cody. And that's kind of the attraction, what holds people keeps people to keep on paying that monthly subscription. Once you got that bike, you get kind of addicted to these classes and these little celebrities. And, they do have like kind of a cult following. So pretty cool stuff, but that means nothing if the numbers aren't right. And over the last couple of years, they haven't, right? So here's that COVID move higher. You can see just some great quarters here where they're just killing it. And then once everything opens back up, people kind of go back into the gyms. They stop selling bikes. We have struggled. Okay. And it's been a long 4 years, but finally we're starting to see some earnings beats, some 100% your EPS beat back in late 2024, some hiccups, but look at this one. This is their biggest beat ever, 170% on this last quarter. It's caught in the eye of some analysts who are raising estimates. It caught the eye of me. And most recently, Goldman Sachs lifted their price target to $11.50 from $7. They have a buy on the stock that's up from neutral. So that really caught my attention, and I wanted to kind of see what's going on with that, right? So there is some potential news coming out. They do have a big announcement, a major product event announcement in October. So that's in the next month or two. We're going to see them announce, and there's a lot of speculation about that has something to do with AI. I don't know what they're going to do with AI, but there's something called Peloton Intelligence, which is their AI platform. So this is something to watch out for, and perhaps a catalyst before their next earnings. This Pillow Buddy website has a nice write-up on what to expect. All just speculation now, but this is the next catalyst before earnings and what could get this stock moving. Okay, but let's look at those earnings that we saw. The last beat was pretty good. That helped estimates move. Okay, the current quarter still, we're seeing some downticks, but look at the upcoming quarters. We see negative 11 to negative 6. That's improvement. We see analysts moving up, still some down, but analysts are lifting estimates. Looking at the current year, even better, right? We were at negative 19 30 days ago. Now we're positive 7. They're making money. And then next year, another improvement, negative 8 to plus 9 cents. So things are really moving in the right direction. That's why we're seeing an improvement within the Zacks rank, is because those estimates are going the right way. Now, kind of looking at the those earnings, we had a 5-cent a 5-cent report for Q4. That was above the negative 7 cents. So that was a nice beat. Revenue came in above expectations. The guide for Q1 was a little light, hence in the next quarter's estimates not improving. But we're seeing adjusted EBITDA 140 million last year, or this year versus 70 million last year. Free cash flow 113 million versus 26 million last year. So we're seeing kind of improvement in the actual bottom line fundamentals. Okay. So that's kind of the story on how we're turning around fundamentally. Let's look at the charts and kind of see where we might be able to go from here. I'll close these. Okay. So this is looking back to that crazy up move and the subsequent down move. We want to zoom in. Let's zoom in here and look at some resistance levels. You can see we got down under $3 a share, had a nice bounce, but we're coming in. Okay. $5. And then throughout the year, we had that good earnings report here. We get up to $9 and we're pulling back. Looking at resistance levels, $10 is a key area, 10, 10, 10. So if we can get back up to the 10 area, I'm going to be watching that. If we can break by, I'm looking at the next level, 14, and the next level, 18. So that's immediately what I'm looking at on the longer term. So let's zoom in even more. We have our 200-day moving average here, our 21-day, and our 50-day. 200-day moving average seems to be holding. The 21-day on this recent sell-off, this was a market sell-off, held. We're dancing above that level. As long as we stay above this 50-day, I feel pretty good. We need to stay above 6, or this story from the chart perspective is likely over. Let's look at some fibs. We'll draw some fibs here from this recent low to the high. Dipped into this buy zone right here, the 61.8, halfway back buy zone. And I'm targeting 950. Okay, now let's take this off. We'll look at even bigger picture. We can draw from these highs to lows to get an extension. So I'm looking at this 161.8 extension. We're above this 61.8 resistance. We did fail, but if we can get back above there and take out these highs, my target for this stock is going to be up here around $14. So I think short term, we can get that 950, maybe that catalyst, that news coming out in a month, we can get up here. And then into the end of the year, if that plays out, into the end of the year, let me start over. If that plays out where we get some positive catalyst and then we get some continued earnings momentum, I'm going to be looking for this $14 level. So this might be a December or early January kind of play if everything goes right. So, okay, that's my pick. And Peloton, I love the product. I use the product. I've stayed away from this stock for a long time, but we just put in Counter-Strike. I like this risk reward. Risking about $1.50 against 6 to make $5-6 into 14. I love that risk reward. I think it's a winner. Okay, that's it for Peloton. Here is Bolin with his pick.
Well, thank you, Mr. Jeremy Mullen, for that wonderful top stock pick. I am Brian Bolin. I'm the aggressive growth stock strategist here at Zacks, and I have my top stock pick for the week. Let's get right into it, shall we? It's TAT Technologies, TAT Technologies, and TATT is the ticker. It's a Zacks rank number 1. That's a strong buy. It's got D's for value and for growth. So I figured we would take a look at this stock, maybe just in a little bit more detail than normal. I mean, this is a defense contractor in the aerospace market, making things for F-16s, other fighter jets, other military vehicles. If we look at this chart, we can see that it's run up rather nice. We've got a $500 million market cap, so it is a small cap stock and a 25 times forward earnings multiple. Let's take a look at the numbers we always look at. We didn't have estimates for the last 3 quarters, but we did have one for the most recent quarter, and it was a beat of a penny. So that's good to see. How about the estimates? Are they on the right track? Well, I can tell you they are. It's a Zacks ranked number 1. We know that. But in the last 30 days, this number has moved from 33 to 41, 35 to 40 here. For the full year, $1.31 to $1.45, and next year, $1.89 to $2.15. All looks good on the earnings estimates and beating the number. Let's take a look at our growth. And this is one thing that I'd love to see is 16% top line growth for this year. And then for next year, we're looking at 25%. And that is just great to see. Great to see. So 24%. So don't hold me to that one. All right. Now let's take a look at our valuation. We are seeing that we have a 25 times forward earnings multiple, 2.8 times book. Value investors will still be interested because it's under 3 times on the price to book, under 3 times on price to sales, which is great. 18% top line growth. And we can see our margins moving up from 7.3 to 8% to 8.2%. Everything looks pretty good here. And finally, we're going to take a look at the chart, and we can see that this has just moved sharply higher since last year and just on a nice trend. Obviously, there is, ups and downs more recently, but I imagine with all the international struggles, and we're starting to hear about Venezuela and Mexico and some other places, that there's still going to be a need for defense equipment. So TAT Technologies is my pick. Well, that's it for this week. Be sure to join us next week when we take a look at 2 top stock picks. But until then, why don't you go to Zacks.com/promo to check out all of our latest promotions.